And why does all this matter at all? Well, it's because I declared a while ago that Tuesday, which was my birthday, not that I want to keep harping on that, but that's what I declared. I said that it was going to be my birthday present, that crypto summer would arrive, that we would get the crypto equinox. I think I might be early, maybe it's June 15th. June 15th was the spring equinox last year. Maybe it will be June 15th this year, so maybe I'm a little early. But the really interesting factoid is Bitcoin's dead flat over the last 12 months. That's pretty interesting. And it's because it fell from 60 down to, 27 or whatever, and then it was kind of flattish, and then it had the 50, down to 15 during the FTX debacle. And if you look at the chart, it's like a beautiful inverse head and shoulders at 27,000. So it's a really interesting technical pattern. And, I think we need to see some good news to get the momentum going. Mark Yusko, a renowned American investor and hedge fund manager, brings a refreshing perspective to the world of crypto analysis. Moving away from conventional terms such as bear and bull market cycles, Yusko applies the concept of seasonality to the crypto markets. In his view, the crypto market experiences a metaphorical winter where asset values dip, a spring that offers a temporary respite, and finally a summer that ushers in significant rallies and unprecedented all-time highs. Last year, Yusko anticipated that the crypto market was shedding its winter coat and embracing the warmth of spring. Yet the unexpected storm that was Sam Bankman-Fried brought unforeseen scrutiny and dumping to the industry. Right now, Yusko believes we are on the cusp of the long-awaited arrival of crypto summer, foreseeing all-time highs for Bitcoin, Ethereum, and the broader cryptocurrency market. In the near future, Yusko further attributes the surge in crypto and stock markets primarily to an influx of liquidity injected by the world's major central banks. Despite this, the central bank's commitment to curb inflation, their recent injection of $1 trillion into the market over the past quarter, has led to remarkable market growth. Yusko is confident that these global liquidity surges, due to further collapses of banks, will herald the onset of crypto summer. In the ensuing discussion, Yusko also shares his perspective on the current state of the US economy, his outlook for Bitcoin and the crypto market, and what expectations investors should hold for the future. Before we jump into Yusko's fascinating insights, remember that only a small % of my viewers are subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free, and you can always change your mind on the margin. There are a few that said, "Whoa, banks are less safe. I need to be my own bank." Yeah, and there was literally some demand for BTC. Yeah, I think much of the big move this year was short covering, right? So you had the big Binance short liquidation early in February. March, you had more short covering around some kind of news around the liquidation of the mint-to-gox stuff that actually didn't happen, and so that was part of it. But then you had some real demand, right? I mean, MicroStrategy and Michael Saylor was out buying, and that was real. But I do think, and actually the topic of my presentation later today is about the banking crisis of 23, and I go back throughout history of the banking crisis from the 1800s to the 1900s. What's interesting is if you would have said, we're going to have 3 of the largest bank failures in history this year, which was not on anyone's bingo card, by the way. If you would have said that this would be the largest year for bank failures in history, now part of that's inflation adjustments, but even inflation adjusted it was bigger than 2008. Because when people forget it's 2008, it was really just YMU, and then there were a bunch of smaller banks in 9, 10, 11 that failed, so there could be another wave of failures going on, and we've seen that with PacWest and Western Alliance and things like that. But if you would have said that that was going to happen, you would have thought, oh my God, Bitcoin is going to crash. Instead, it's up meaningfully, and I do think there's information content there. And I come back to the whole thing that all of this, I think, is a plan to foment fear in the banking system so that we'll all gladly, happily accept the CBDC that's coming, and that's the sinister Saturday part that I sure you don't want to talk about. The point is, there's going to be so many types of bodies flowing, floating, and, commercial real estate. It's coming, and, that was part of this presentation I've done. They tried to label Signature Bank Crypto Bank, right, to shut it down. Cryptos are not frustrating this much. It's all real estate, and they're going to get destroyed, right? Those loans are going to get destroyed, and so there's no way the FDIC could bail them out, because they don't have any money. In fact, the announcement today, they're going to charge the big banks billions of dollars to try to replenish the FDIC coffer because they burned it all up on FRC. And it looks bad. And we talked last week about 350 California, $300 million asset, that the bids are 60 to 70. That's someone else's asset, right? That loan is someone else's asset, and that's going to get vaporized. It was circulating around the internet yesterday with The Rock with Kevin Hart tucked under his arm from that movie they did together. And it was like, Kevin Hart was the, inflation number reported inflation, and The Rock was actual inflation, like real-life inflation. And look, this is back to your point on circus. This is the bread and circuses thing, right? If you can get a couple of things that people care about to be cheap, and you can entertain them, they won't pay attention to the reality that's going on around them. They won't pay attention to the fact that they're stuck in, these slavish jobs and barely getting by and have a low quality of life. I mean, if you can entertain them, which is what mainstream media has turned into, and I don't know your word, right? I'm saddened by this. I'm very sad to watch. Again, I call it systematic, fully planned, like a surgical strike against the human psyche, and it just channels money to the tippy top of that all-seeing eye pyramid. And the fact that there aren't, more threats of riots is kind of weird. The more you extend the euphoria, the more crazy people get. Yeah, the more risk they seek, the more margin they're willing to take, the more assets they will cross-collateralize. And when it unwinds, that's why it's, the markets take the escalator up and the elevator down. And that's just the way it works. And again, it's not necessarily a bad thing, that cleansing. We've talked about it with, the winter in crypto, and, winters are not bad. We need them to, kill off the bad and, erase the bad companies and the tech bubble crashing in 01 and 02, right? We needed WorldCom to go away. We needed everyone to go away. We needed, Humor Technologies to go away in order for Chewy.com and Amazon and other companies to emerge and become stronger. And for people to say, oh, okay, that's how you do it. That's good, I like that. That other stuff was a bubble, so that absolutely is real. But I think the financialization and the gamification of markets in the past decade will make, I believe, this final reckoning worse. It's not imaginary, We're not tilting at windmills here. This is real stuff. And the class divide is real. The US versus them, the haves and the have-nots. It's all real. There's an amazing chart, yesterday, the day before. If you look at the net worth of the bottom 50, it's basically dead flat, inflation adjusted, for 30 years. The top 1%, it's a 45-degree line. It's been the greatest time in history to be rich. And it's exemplified by, the Forbes 400 and all the billionaire class. It's a topic for another day, but it isn't our imagination, and it's not new, right? You can go back to Seneca, back to Socrates. You can go back to, the Peloponnesian Wars. You go back to any of these things, and they all have their roots in the same thing that, ultimately, cronyism crowds out capitalism. Capitalism is the only goodism there is. And cronyism leads to largesse and softness, and ultimately collapse. And then, the new boss, the new sheriff's in town, so to speak. There's Marcus going why he believes because of the banking crisis we are witnessing unfold. We are on the brink of a crypto sum-up. However, although a good message for crypto investors, Yusko does bleed for traditional markets and assets. There is a lot more pain to come. The big boogeyman in the room many financial analysts are pointing at is corporate real estate. With interest rates going to virtually zero following the pandemic, huge risks were taken by individuals and businesses. And one area this was seen is corporate real estate, with huge loans being taken out because of what was thought to be cheap money. Now, with the fastest rate of increase of interest rates the world has ever seen, that cheap money is now a lot more expensive, with interest rates going up 20-fold from 0.25 to now 5, and with many corporate real estate blocks sitting completely vacant. A wave of defaults is coming that everyone can see. Yusko argues this, amongst with many other factors, is going to lead to a lot of pain to come for traditional markets and assets, and a harsher recession than many predict. But what do you guys think? Let me know in the comments. Do you think a harsher recession is on the horizon? And are we on the brink of a crypto summer anyway? Guys, hope you all enjoyed today's video and that provided you some value. I'll see you all in the next video, and as always, all the best.